Good morning. Today on Morning Markets we'll focus on the possibility of UK interest rates being reduced. So today I wanted to build a little bit further on Kevin's commentary from yesterday, where he really set out how important this week is in terms of data for the UK economy, particularly Wednesday's data point when we look towards the inflation numbers. Yesterday we heard from Ben Broadbent, the Deputy Governor at the Bank of England. In his final speech, he spent 13 years on the MPC committee, and he also touched on a number of those points that Kevin was addressing yesterday, but putting context to those as to how he is thinking about them in terms of as we approach the next Bank of England decision meeting. So if we maybe unpack a few of the points that he was making, he was discussing the interaction between wage growth and how that feeds into consumer prices and how that interacts with businesses. Certainly those are the two main factors that he is looking at, but also highlighting how those factors and their interaction are coming together in a way that is very much supportive of that base case of UK inflation returning to the 2% target. He also gives some data that used the Bank of England's network of agents. These are individuals across the country that report back to the Bank of England in terms of what they're seeing, what they're observing from companies that they're speaking to. One of the key points that he picked out was that they are starting to comment that it is becoming slightly more difficult for businesses to continue raising prices to offset some of the wage inflation that they've been seeing, and that's a positive. So if we bring that all together, he was very clear that the possibility of interest rate cuts are certainly more evident than they have been, given how the data is evolving, and that he could see a reason as to why an interest rate cut could occur in the summer. And that's likely to mean either at the June or August meeting. And I think that's quite an interesting comment for him to have made, given that only earlier this month he didn't vote for a cut when the MPC voted 7-2 to keep rates unchanged. So that's from a UK perspective. We also had some data points in the US, primarily a couple of speeches, and they just highlighted that slight contrast with some of the comments that Ben Broadbent was making for here in the UK. Primarily that the rate of slowdown inflation in the US, whilst ongoing, has not been as swift as had been expected, and that's presenting a slight conundrum in terms of when the Federal Reserve will be able to reduce interest rates. Certainly if we look at market expectations today, it does look like we will see both the Bank of England and the ECB reduce interest rates in the summer, with the Federal Reserve likely to be something towards the fourth quarter of this year. I'll leave it there today, but please do join my colleagues tomorrow when we'll be discussing the UK CPI report.